Now let's talk about what's happening in India. Higher energy costs are driving up food and fuel prices, just like the rest of the world. Inflation is not showing any signs of letting up. So earlier today, the Reserve Bank of India, India's central bank, intervened. They hiked key lending rates once again. By how much? 50 basis points or 0.5%. The RBI's new lending rate is 5.4%. What does this mean for you, the consumer? Your loans will become more expensive, your EMIs will be higher. Basically, borrowing money will now cost you more. And that's precisely the idea behind increasing lending rates. If credit is more expensive, people will take less loans. You see, less loans equals less spending, and less spending equals less inflation. That is the logic behind increasing interest rates. And this is the third interest hike by India's central bank. The first was in the month of May. Interest rates were increased by 40 basis points. The second was in June. Interest rates were hiked by 50 basis points. Analysts were expecting another hike in August. The question was by how much? They were split between 25 and 50 basis points. As it turned out, the RBI opted for the more aggressive option, 50. RBI Governor Shaktikanta Das emphasized on bringing inflation down to 4%. Listen to this.
In such a milieu, with growth momentum expected to be resilient despite headwinds from the external sector, monetary policy should persevere further in its stance of withdrawal of accommodation to ensure that inflation moves close to the target of 4% over the medium term, while, of course, supporting growth.
The problem is the RBI has multiple things to consider. Number one is inflation, of course. India's retail inflation was at 7.03% in June. The ideal level is around 4%. But getting there will likely be a long journey. The RBI is expecting inflation to be above 6% in the next quarter as well. So a rate hike was inevitable. Factor number two is the rupee. The RBI has been selling reserves to prop up the Indian currency. And to some extent, it has worked. Last month, the dollar had reached 80 against the rupee. So $1 was for more than 80 rupees. But now, it's back around 79. Does that mean the rupee has recovered? Unfortunately, no, it hasn't. But it does mean that the slide has been stopped temporarily. And factor number three is growth. You see, credit is the engine of economic growth. Cheap credit is the engine. Businesses take out loans to expand. Consumers take out loans to buy stuff. So every growing economy needs cheap credit. But if the interest rates keep increasing, that will not happen. Economic growth could be throttled. So the RBI basically must balance these three problems simultaneously: rising inflation, falling rupee, and stagnating growth. And that last one is a worry across the world, stagnating growth. The International Monetary Fund has revised growth estimates for most countries. Let me show you the data. The IMF's initial forecast for India was 8.2%. The new estimate is 7.4%. The American projection is down to 2.3% from 3.7%. And China is down from 4.4% to 3.3%. So compared to other big economies, India is still doing well, sort of like a bright spot. In fact, India has the fourth highest forex reserves in the world, almost $570 billion. That is enough to cover imports for almost 12 months. Having said that, outside factors can still play spoilsport. First, the war in Ukraine, and now the tensions in the Taiwan Strait. Both factors are driving inflation in India. The matter reached India's parliament this week. Opposition lawmakers clad in black marched to the presidential palace in New Delhi. Dozens of them were detained by the police. So the pressure is building on the government, not just here in India, but all over the world. They're under pressure to ease the cost of living crisis. At the same time, they can't afford to spend too much, because if they do, it will make inflation worse. So right now, India's economic future is firmly linked to the global situation. If Russia cuts gas supply to Europe, India will suffer. Energy prices will skyrocket, and chances are there will be shortages in the Asian market. And that's the thing about bright spots. You may be shining alone, but eventually the darkness around you becomes overwhelming. WION is now available in your country. Download the app now and get all the news on the move.